if Bitcoin can't deal with ETFs, it wasn't even worth owning for the past 15 years. Stablecoins are just kind of the latest iteration of Eurodollars, and there's a demand for it, and it's like offshore banking for the middle class, right? Because it kind of reduces the overhead of someone in Argentina or Egypt or Lebanon accessing dollars if they want that for whatever purposes they might want that. So I think stablecoins and networks that run stablecoins have relevance for probably quite a while.
In a recent interview, Lynn Alden delves into Bitcoin's evolving roles, the inevitability of Bitcoin ETFs, and its place within the global asset market. She explores the hurdles Bitcoin faces, including price volatility, technological obstacles, and taxation challenges, while highlighting the potential opportunities that lie ahead as adoption and mainstream recognition continue to accelerate. Alden points to the potential for Bitcoin's value to surge, even predicting a possible price increase to $100,000 by the last quarter of 2024, fueled by growing institutional interest and a maturing market structure. With the introduction of Bitcoin ETFs becoming more inevitable, Alden compares Bitcoin to traditional assets like real estate and fiat currencies, presenting a forward-looking view on Bitcoin's expanding influence and its increasing importance in the global financial ecosystem. By addressing issues from energy consumption to the ongoing debate between proof-of-work and proof-of-stake mechanisms, Alden offers valuable insights to both seasoned investors and newcomers, explaining why Bitcoin remains a pivotal asset in the future financial landscape. Watch clips from the interview to gain deeper insights into her thoughts.
I mean, I think it's all of it. I think it's money. I think it goes through different adoption periods over time, right? So one of the first things it was used for is a collectible. People liked it because it was the best way of solving something that people have been trying to solve for a while. And then one of the first practical use cases was medium of exchange for WikiLeaks. You know, when basically when other payments are shut down, here's this thing that can still work, right? But then the medium of exchange usage kind of stalled, or at least didn't grow as fast as many people thought. And I would say that's a couple key reasons. One is not everybody has payments problems, right? I mean, you know, and I don't really wake up every day and think I'm trying to pay for things and I'm having trouble doing so, right? In certain jurisdictions, people have those issues. Throughout much of the developed world, not really, unless we're talking about international payments. And then in addition, most governments make every Bitcoin transaction taxable. Yeah, so you have this big accounting overhead if you want to use it like that. So that's not really where it's gravitated to for a while. And instead, the store of value property became pretty dominant, which is, okay, I want to hold this thing that they're not making more of and that is getting better over time as programmers keep building new layers and applications and things for it. I mean, at the long run, both are useful. I think generally speaking, it doesn't become a commonly used medium of exchange until people already have pretty large cash balances in it. And probably then the volatility is lower, because if 10 times more people hold it, there's like less individual whales or leverage or offshore stuff that could just blow up and then, you know, knock 10% overnight or 20% overnight or more. So I think as it becomes larger, more liquid, more people have these balances in it, they're more likely to want to use it. There's more people in a country that then petition their government to change the tax structure around it. Maybe you exclude the first, you know, certain amount of transactions from being taxable or things like that, or you go full El Salvador and just make it legal tender. The total addressable market of good money is arguably the biggest or second biggest market out there, along with real estate, right? So, you know, if you look at there's 900 trillion in estimated assets in the world, and so we're like less than 1% for Bitcoin. Even gold at something like 20 trillion now is tiny compared to global assets. Some of the areas that are shockingly big are fiat currencies and bonds. I mean, there are hundreds of trillions of dollars of value. And I think a lot of that is better served in Bitcoin. And just people, it's obviously got high volatility, which keeps people out. It's got technological uncertainty. I mean, it's a 15, 16-year-old project. So, you know, nation states don't put their $1 trillion sovereign wealth fund aggressively into it. until maybe it's 30 years old, and it's 10 times bigger, right? So I think, and the way that I've described this before is that it has to reach certain thresholds before it even becomes interesting to higher thresholds. So back when the market cap was like $1 billion and it was pretty illiquid, and like literally like one wealthy person could just buy in that day and move the price, that's not interesting to sovereign wealth funds or BlackRock or billionaires, because it's like it's just too small and illiquid for them to even put a significant amount of their capital into it. But then when it starts to become bigger, and they can say, well, I can actually layer into this asset at a meaningful amount for me. Like I can be fairly certain that I'd be able to sell if I needed to, because the liquidity would be there. And then higher level, then even bigger pools of capital can say, hey, this is actually, worthwhile being on our radar now. And so I think I don't really look at it in terms of Bitcoin price. I mean, the unit numbers are arbitrary. The decimal point could have been somewhere else. And instead, it's more of like, what is the network worth, right? So the fact that it's only like $1 trillion and change right now for market cap, I think is tiny compared to what it could be worth in 10, 20, 30 years.
Lynn Alden discusses Bitcoin's evolution, noting its initial appeal as a collectible and its use as a medium of exchange for WikiLeaks. However, its adoption as a currency stalled due to factors like low payment issues in developed countries and taxation on transactions, making it impractical for daily use. Instead, Bitcoin's role as a store of value gained prominence as people valued its scarcity and continued development. Also, the argument for Bitcoin ETFs has become increasingly compelling, as large assets often develop ETFs to enhance accessibility. With a significant price rally anticipated before the year ends, the introduction of Bitcoin ETFs could serve as a catalyst for even greater adoption and mainstream integration. ETFs are likely to play a pivotal role in making Bitcoin more accessible to retirement accounts and traditional brokerages, offering a bridge between the crypto world and the traditional financial system. Let's watch more clips from the interview.
I think they're inevitable. It's just like any big liquid asset is going to have ETFs. So if Bitcoin can't deal with ETFs, it wasn't even worth owning for the past 15 years, right? Now, you still have to think, okay, is Bitcoin good enough in a place, technologically speaking, that that holding it yourself is workable and attractive compared to letting someone else hold it for you? And if not, then what can be done to keep improving that in various ways? I mean, that's why I do Bitcoin Venture. I'm a general partner at Ego Death Capital, so we're literally funding companies that are trying to improve the ecosystem in some way. But I think ETFs are inevitable. I think they're pools of capital, especially in retirement accounts, that literally don't have another way to get in. This is they have a existing brokerage, and they want to be able to buy an asset, and they don't want to hold the keys. And I think that not everybody wants to hold the keys, kind of like how not everybody wants to fix their own car. Not everyone wants to, be a handyman around their house. And some people just don't really want to hold, they don't really want that sovereign property. And I think it's something worth monitoring. And then also, like, GBTC existed for years as a adjacent to an ETF, and it got over 600,000 Bitcoin in it at one point. And so a lot of this current ETF accumulation is just money flowing out of that and into other ETFs, which are still ultimately mostly at Coinbase. And so I think that there's risk of concentration, but it's not as big as people think, because it's not that much more coins in these things than there were 3 years ago when it was just GBTC. So I just think it's inevitable. It's pools of capital are going to do that. I've described this as like an API into the fiat system. People have these existing brokerages, and this was like an upgrade that the fiat currency system decided to make to plug into Bitcoin. It's not something that Bitcoin decided. It's something that the BlackRocks and the SECs of the world decided, and so they opened their system to plug into Bitcoin a little bit more than they did a year ago. And I've been clear that I've been bullish on stablecoins for a while. The broader topic is just any real world assets, right? So it could be tokenized gold, it could be tokenized T-bills, tokenized dollars. That's what a stablecoin is. Basically, there's in financial history, there's always been euro dollars, which is dollars that exist outside of the US banking environment, not just in Europe, but elsewhere, even though they're called euro dollars. And stablecoins are just kind of the latest iteration of euro dollars. and there's a demand for it, and it's like offshore banking for the middle class, right? Because it kind of reduces the overhead of someone in Argentina or Egypt or Lebanon accessing dollars if they want that for whatever purposes they might want that. So I think stablecoins and networks that run stablecoins have relevance for probably quite a while. There's been interesting research. Like there are programmers on other networks that have, they've pushed forward the computer science of rollups and things like that eventually can find their way to Bitcoin in some capacity. So, I think that it's partly going through this iterative process to see what works. There's a lot of scams there, obviously, but the short answer is that outside of Bitcoin and stable coins and these little kind of research niches, I've been publicly skeptical on the value of most of that other stuff.
In other news, Bitfinex describes last week's nearly 10% decline in Bitcoin as a healthy realignment rather than a sign of an impending crash. The analysts explain that the drop to the 60,000 support zone, along with other technical factors, is a strong indicator that volatility risks have lowered. The price rally to 66,600 on September 27th quickly faded as geopolitical tensions in the Middle East and concerns over the U.S. economy dampened market optimism. Bitcoin's fall from its peak to the October 4th low showed cautious sentiment among spot investors. And analysts note that this correction has stabilized the market as the price dropped. Bitcoin's open interest shrank from $35 billion to $31.8 billion. Bitfinex points out that over $450 million worth of long positions were liquidated during the dip, showing a long-biased market stance and how leveraged positions became a factor when the price fell below $65,000. Despite the dip, Bitfinex remains optimistic, citing positive labor data from the U.S. and expecting the Federal Reserve to cut interest rates in November. They mentioned that Bitcoin's recovery to 62,650 has seen a return of spot buying aggression, but they caution against drawing definitive conclusions about short-term trends. They suggest watching early week trading sessions, especially in the U.S., for clues on Bitcoin's next move. As we near the end of 2024, the burning question is, with Bitcoin on the verge of a massive price rally, will it reshape the global financial system, or are the obstacles still too high for it to fully dominate?